If you've been thinking about life insurance and not quite sure if you have enough or maybe just haven't wanted to approach the subject at all, today's episode, Survivors Don't Care About Having Too Much Life Insurance, is the perfect episode to not only inspire you to actually take action, but to give you 3 steps to go through to get across the finish line and getting it completed. Now, when you go to the movies, you probably get some popcorn. When you walk in, you walk to the stand, you look up, and first you say, how could popcorn possibly be that expensive? But after you get over that initial shock, what you're going to say is, well, maybe I should just get the small one so I could be as affordable as I can with this. And then you look at the jumbo box, which is like 8 times the size with free refills, and it only costs a couple dollars more. And if you're like me, you wind up getting that one because for a couple extra dollars, I get a whole heck of a lot more popcorn. So when we're talking about life insurance, it's very much the same thing, where if we have too much life insurance, generally speaking, the survivor's not going to be so upset about that. If we say, hey, I have a little bit too much life insurance, I really wish Jimmy had cut back on his life insurance coverage before he passed away, obviously that's not the sort of thing that's going to happen in real life. And when you look at the need for life insurance, your biggest asset could very well be your future income potential, which life insurance is supposed to be covering for. If you look at somebody who has $100,000 a year in earnings, 20 years out from retirement, they have over $2 million in future income earning potential, not even including any raises or bonuses or anything like that. That is most likely, if not their biggest financial asset, one of their biggest financial assets, and something that is very well worth protecting. When you look at the cost of life insurance, there are different types. Generally speaking, term insurance can be a great answer to providing cost-effective coverage, especially if you are younger and if you are healthy. If you're looking at, say, a $1.5 million policy versus a $2 million policy, if you're a young, healthy 30-year-old on a 30-year term, that could be as little as $25 to $50 a month extra for that jump up in coverage. And again, if something, God forbid, happened to you, I'm pretty sure your spouse is not going to be complaining that they got an extra $500,000 worth of life insurance. If you look at your expenses on a monthly basis, I'm guessing they fluctuate by more than $25 to $50 per month. Even if maybe you're a little older, maybe not as healthy, and it costs an extra couple $100 per month instead. Again, if you look at your expenses, are your normal expenses fluctuating by more than a couple $100 a month? Probably so. So if you can afford some flexibility in your month-to-month expenses, why not put it in a place where it's providing that protection for your family? Because I know no one wants to think about death. No one wants to think about dying. At the same time, if you spend 2 seconds and think of a scenario where something happens to you, and now not only is your spouse and maybe your kids mourning your loss, but on top of that, at the same time, they're also having to sell their home. They're also having to send the other spouse back to work. Whatever it may be, you don't want to add financial duress on top of emotional duress if something were to happen to you. So the 3 steps to kind of get this going over the finish line, the first one is talking to your spouse. You need to say, hey, if something, God forbid, were to happen to me, happen to you, what do we think we would do? And why this comes into play is because we've had situations where one spouse says, hey, I would go back to work full time. We have another spouse that might say, hey, I would sell the house and move into with my parents. So what the other spouse's reaction is expected to be if, God forbid, something happens to you can play a part in how much life insurance you might actually need. Now, again, it's always probably better to have a little bit more than a little bit too little, but going through that scenario can help shape the field that you're playing on for how much insurance you may need. The second step is if you have a stay-at-home spouse that's taking care of the kids, please don't overlook them. Their contributions have a financial impact as well. If that spouse that's staying home is not there anymore, you probably still have to go to work, right? So you're going to need extra childcare support. And that might be, let's say it's $25,000 a year as a guess, and you want 20 years worth of coverage on a 20-year term policy to get them through college and their early adult life. That's a $450,000 policy on the spouse that's staying at home. So don't forget to build that in if one of you works and the other spouse does not work. Finally, going out and calculating your coverage, look to see how much you guys are spending or living on a monthly basis. So let's say you're living on $10,000 every month. That's $120,000 every year. If you're 10 years out from retirement and you are the sole breadwinner, maybe a $1.2 million policy would be appropriate in that case for that 10-year period of time to cover that income need. Again, your future income potential could be either your most important asset or certainly is probably one of your most important assets. So it's really important to take care of that asset, look at ways to cover that expense so you don't have to worry about it. If something were to happen to you, that your family is going to be covered. Remember, that box of popcorn, a little bit bigger one, a little bit more money, goes really a long, long way when it is a situation where your family actually needs it. So thanks for joining me today, and stay tuned for more episodes to come.